Hi there, I'm Pamela Ambler. Welcome to I See Your Trade, the show that looks ahead with fresh insights and data-driven deep dives. In this episode, will a strong Asia save the day in 2023? There's a broad consensus among analysts that Western economies are in for a tough time over the coming quarters. Europe is facing a chilly winter as it deals with an energy crisis. And in the US, the Fed has made it clear that it will keep hiking rates until it brings inflation under control. This dreary outlook is in stark contrast to much of the data we're seeing from Asia economies at the moment, which show many taking off like firecrackers. I See Your Trade is brought to you by IC Markets, a leading high-performance trading provider. Trade up to IC Markets. My guest today is Alex Holmes, senior economist at Oxford Economics, joining me now from Singapore. Alex, thanks for being with us. Let's dive into the data. One of the benefits of doing a podcast is that you can see the charts that we're talking about. So if you're listening via audio only, we encourage you to turn on the screen now so that you can see the charts. But for our listeners, we will also talk you through the data. Let's jump right in. Alex, can you give us some sense of how Asian economies have been performing in recent months and what might be behind this contrast?
Well, we're in the midst of getting a lot of the Q3 GDP figures at the moment. Some of them have already come out and some of them will be coming out over the coming months. And they're generally coming in pretty hot. Even the delayed data from China was a bit better than most people were expecting. And then you've got places like Vietnam that are growing in the double figures. Malaysia, yet to be released, that's likely to be above 10% as well, which is really, really high levels of growth. I mean, some of this is due to a weak base for comparison from last year when the region was hit by the Delta wave. But even if you look at the kind of Q-on-Q growth figures, which show recent momentum, growth rates are generally above trend in Asia. So what might be the reason for this? Well, in order to answer that question, you really need to kind of step away from looking at just quarter-on-quarter and year-on-year growth rates and zoom out a bit and try and think about where GDP is in levels terms and where it is relative to where it was in 2019. So one way of doing that is to try and think of a counterfactual of where economies would have been had there been no pandemic. So countries like China and Indonesia will usually grow at 5 or 6%, Malaysia 4 or 5%, and Thailand's maybe 3 or 4%. So you might reasonably expect these economies to be respectively about 15 or 10% larger in 2022 than they were in 2019 in the absence of any pandemic. So the question is, are they anywhere near that? And the answer is no. In many cases, they're well behind their pre-crisis trend. And in a few cases, such as Thailand and the Philippines, they've barely got back to where they started. Now that's in contrast to particularly the US, which reached its pre-pandemic trend last year even. So the reason for the difference between the really rapid growth rates you're seeing in Q3 figures at the moment in Asia and some of the really quite downbeat data that you're seeing from the US and Europe is that in large part it's due to the fact that Asia are far less advanced in their sort of stage of the recovery. So there's plenty of scope for catch-up. And that's mainly because Asian economies opened up a lot later. It's only really kind of like in the last couple of quarters that the Asian economies have really got rid of most of their COVID restrictions and consumers and businesses have got used to being in kind of a normal situation and living with COVID.
And with plenty of scope for further catch-up, will Asia continue to grow strongly?
Well, there is plenty of scope for further catch-up. Still, parts of Asian economies have a way to go to recover, particularly on the investment side, on the construction side. Labour flows within the region have only just started to get back to normal. So the sort of labour shortages that have been holding back construction and industry are now easing. and there's plenty of scope for that to ease more. But there is an issue. Asia is facing lots of headwinds, and those headwinds to growth are mounting, and the recovery is entering a much more difficult phase. The biggest one really is the external environment. Now, Asia is a very export-dependent region, and so if there's shallow recessions in the US and the Eurozone and the UK, as we and many others expect early next year, that's going to weigh on demand for the goods that are produced in Asia. But it's not just this usual relationship between growth in the advanced world and exports from Asia. There are some added factors that means that we think that exports are going to slow over and above that usual relationship. So the first is that the composition of demand is changing. So over the pandemic, goods exports from Asia performed extraordinarily strongly. And that was because people weren't able to spend on services such as tourism and recreation, and instead spent more on goods as they stayed at home. Now that's started to reverse. People are switching back their spending away from goods towards services again. And that means that Asian demand for Asian goods is going to drop back. You've also got a turn in the electronics cycle. They were one of the big outperformers over the pandemic, and particularly semiconductors. Exports from Taiwan and Korea, and to a less extent places like Malaysia and Singapore, were really propelled by an electronics boom. Now we see a turn in the semiconductor cycle, and we're really only at the start of that. There's lots in the news at the moment about semiconductor manufacturers cutting back their plans for the coming years and capital expenditure and raising and lowering rather their forecasts for growth. So if exports fall, that's going to hit employment growth in Asia. That will flow through to earnings, slower earnings growth, and weigh on domestic demand. At the same time, Asia is facing much of the other external challenges as in the rest of the world. So high fuel prices, high food prices. Then you've got the Fed, which is tightening, and it still has some more tightening to go. And that's weighing on Asian currencies and forcing central banks here to tighten more than they probably would want to at this stage in their economic recovery. So really an unprecedented mix of challenges for Asian economies going into 2023. And it really means that even though there's lots of scope for economies to recover, they're really going to have a hard time doing so, continuing these high rates of growth with all the headwinds that they're facing.
Right. Now, also coming out of the National Party Congress, the outcome for China is to maintain the current status quo. But what about when they drop zero COVID? Won't that provide a big boost to China's economy as well as the wider region?
Yeah, so there wasn't much really for those looking for signs that China are imminently going to drop zero COVID in the Party Congress. Our expectation is that in H2 next year, China will start to step away from zero COVID as it tries to get the economy growing again. Now that will be a relatively large boost for both China and the rest of the region. Particularly for the rest of the region, China's very important, has become increasingly so in its tourism, with tourists growing to become the sort of dominant share in much of the rest of the region. But that is likely to be slow going, really. As people get the confidence to travel, it's unlikely to happen very quickly. And then for China itself, while there will be a boost to consumption as people are allowed to go about their daily lives again, it's likely to be a slow process, and there are other factors that mean that the economy is not going to get straight back to full health. China has a property sector that has lots of problems. It's a huge proportion of GDP, and winding down the excesses in the property sector is really going to weigh on growth over the coming quarters and even years. So even after zero COVID is dropped, while there might be a short-term boost, all the other problems that China's economy is facing means that it's unlikely to return back to really rapid rates of growth, at least in the near term anyway.
And one of the messages coming out of the Party Congress also seems that President Xi Jinping is going to prioritize the common prosperity policies over economic growth. Now, on the policy front, what can be done on the fiscal and monetary side to keep recoveries going?
I'll take the fiscal side first. So obviously we've had the pandemic, and lots of countries have had to spend large amounts of money really to support people through lockdowns and various restrictions, economic slowdown. That's really hit government budgets and seen debt levels rise. Then you've also had the adding factor of we've had an energy price shock. So in some parts of Asia, namely the Philippines and Malaysia, governments have kept in place fuel subsidies, which has shielded consumers from the rise in energy prices, fuel prices, but it's also come at a massive fiscal cost. So these two things, dealing with the pandemic and then dealing with the follow-on fuel price shock, has really blown out budgets across Asia. So if there's a minor or large downturn in the coming quarters, the fiscal space to deal with it has been drastically reduced from 2019. So lots of places might be looking across the globe to somewhere like the UK, where after the announcement of a mini budget, markets took fright at some of the fiscal plans. And if you're a policymaker in somewhere in Asia, you might be scared that the same might happen to you if you're not careful. So I think the governments are going to be quite careful and quite reserved, and you're not going to see fiscal support flooding in to fill the gap in demand. And on the monetary policy side, I'm afraid it's also a bit of a downbeat picture. The hands of policymakers are tied somewhat by the fact that you've got the Fed hiking rapidly and a strong dollar, meaning that Asian currencies are weakening. Now that means that central banks can't stand apart from the Fed too much, as they're seeing lots of pressure on their currencies. Weaker currencies feed through to higher inflation, capital outflows. So central banks really have to at least partially follow the Fed and raise interest rates. Now, if you go back to what we were discussing at the start about the stage of their recoveries that they're in, with big output gaps and lots of space to catch up, really policymakers in many places probably don't want to be raising rates, but they're being forced to.
Yeah, a delicate balance certainly on the monetary policy front. Well, it sounds like Asia isn't going to be the great counterbalance for the world in 2023, but do things at least look brighter further ahead?
It is looking a little bit better further ahead. The shocks that we're seeing are external shocks, and as those kind of dissipate into the second half of 2023 and into 2024, Asian growth should pick back up. I mean, one thing, even though balance sheets have deteriorated over the pandemic and in subsequent years, they were pretty strong going into the pandemic in 2019. So they're not in a bad position, and there's not loads of damage to repair. So Asian economies should be fairly resilient and bounce back in 2024. But I would highlight that we're certainly in more uncertain times, and there's plenty of risks to the outlook. We're living in a time of supply shocks, even though the supply chain issues from the pandemic are definitely easing now. You can see container shipping rates and other such indicators falling back rapidly. There's risk of more, like if China botches its reopening and is forced to enact big restrictive restrictions again, then that could cause supply chains to falter again. Other such risks are that the US doesn't manage to get a handle on inflation and has to keep tightening well into next year. And that's really going to put more pressure on Asian currencies and force central banks to tighten more. So all of these things are kind of big downside risks. And while economies should get back on their feet later in 2023, it's a risky time.
It might be a controversial topic, but is there a way that Asian economies actually benefit from the energy crisis we're seeing in the West right now?
The energy crisis in the West is not really, there's not really an angle that you can think of where it would be beneficial for Asian economies. The only small thing might be some countries in Asia are buying oil and knock down prices off Russia, but really that's only a kind of a small part of their energy mix. And for the most part, if the US and Europe are sneezed, then Asia catches a cold, given its kind of role as a big exporter and how globalized and tied up they are in global trade.
And you mentioned earlier the dollar's strength. How do you see Asian currencies performing amidst this East versus West divide further on the policy front?
So Asian currencies have weakened a lot over the previous 6 months or so. And we're still not really at the end of the Fed tightening cycle. They've tightened by 300 basis points so far. There's more to come. And the risk is, as I mentioned, that they might hike even more than people are expecting. So really the Asian currencies are likely to remain under pressure until at least markets kind of sight the end of the Fed tightening cycle. That means that central banks are going to have to keep policy tight, even as economies slow into 2023. There's not really any scope for them to loosen rates to support their economies.
And which Asian economies are the leaders amidst this dichotomy we're seeing? What countries do you see as the standouts?
Certain economies have got a bit of a counterbalance to the external pressures that they're facing. So Singapore, for instance, has pretty strong domestic demand at the moment. Wages are growing above inflation, and they've got policy space to support the economy. Other countries might benefit from some of the structural shifts that are happening in the background, even as there's a cyclical downturn. So lots of companies are still pursuing a China plus one strategy and moving some production out of China and into the rest of the region. So that's benefiting places such as Vietnam, such as India, where they're seeing an influx of FDI as global companies try to build and diversify their manufacturing bases in the region.
Well, Asia might not benefit from the impact of the energy crisis in the West, but what will be the impact and to what extent?
So the biggest impact of the energy crisis is that it's pushing up inflation. So while inflation in Asia is generally lower than the rest of the world, it has been creeping up and it's now above central bank targets in most places. And people are now starting to really worry about the cost of living. The problem is, if inflation is too high for too long, the ability of central banks to look through this kind of what may be a temporary shock from the supply side diminishes because people start to expect higher inflation. So central banks have to react to that and tighten monetary policy to try and control inflation expectations. So really the energy price shock is raising inflation, and it's forcing central banks to react.
Thank you, Alex, for joining me today. That was Alex Holmes, senior economist at Oxford Economics. So while the Asian tigers are likely to roar, whether it's enough to counter declining growth in the West remains to be seen. You've been listening to episode 9 of I See Your Trade. I See Your Trade is brought to you by IC Markets, a leading high-performance trading provider. Trade up to IC Markets. Thank you for joining us today, and we look forward to seeing you next time.